So what financial information are they going to ultimately require you to report to them? So there's accessible, that's left side, that's what they are looking at. Non-accessible is basically out of the eyes. So it's not seen by FAFSA in this case. And so let's start on the accessible side. They're going to look at parents' income, parents' assets, students' income, and students' assets. Now, assets they're going to be looked at as a slice in time. So right when you press send on that application in October, when your student's a senior or in college each year, right when you press send, that's when they're looking at your asset balances, right? So keep that in mind. You have up until when you press submit to be able to organize your balance sheet in terms of assets. Now, income is actually looked at prior. So it's actually going to be looked at 2 years back. So for instance, just to give you an example, if your student is going to be a freshman in fall 2022, they're going to be looking at the tax return from 2020. And they're just basically going to require you to link your IRS tax return to the application. So they already have the information. They're basically just transferring it to the application to see how much income you made. A couple notes. So assets, there on the left side that are assessed. That's bank accounts, checking, savings, that's investments, those brokerage accounts, stocks, bonds, mutual funds that you own and individually own brokerage accounts. 529 plans, that's a surprise to most. Yes, the most popular savings vehicle is an asset that they look at. So again, when we talk about being careful about where you're putting your dollars, you don't want to necessarily overfund a bucket that's going to be assessed against you, right? So just think about how you're finding balance between accessible and non-accessible assets. In income, so income that's assessed, that's your normal wages, that's your W-2s. And one bullet that we like to point out there at the bottom, current retirement plan deferrals. So anything you're contributing to your retirement plan, the year of that they're looking at for FAFSA. So on your 2020 tax return, if you contributed $8,000 to a retirement plan, just as an example, that $8,000 would actually be counted as income, even though you put it in a non-accessible asset. Notice that the asset balance, so on the non-accessible side of the fence, the retirement plan assets, so whatever you have there in total in the retirement plans is not counted. We encourage you, that is another big little secret. Do not put your retirement plan balances as part of your investment total on the FAFSA application. They are going to look at what you contributed in that year. They're going to count it as income. They are not going to look at your total balances. So that again is something to have in mind. You don't want that negatively impacting your financial aid score there. Also, look at that bottom bullet, personal debt, right? So they're not going to take into account any debt. That could be student loans, car loans, home equity lines. They're not going to take any of that into account. So even though that's draining your cash flow, they're still not going to be looking at it in the formula. So just have that in mind when you're thinking about what sides of the fence do I want to be on, how am I balancing, how I'm saving, and how I'm preparing for college. And so what we want to break down for you is just a quick scenario.